Good evening, folks. Welcome to TopGunStockTrading.com. My name is Wade Blizzard, Chief Market Analyst here at TopGunStockTrading.com. This video is for Sunday, January 12th, 2014. And I'm doing this weekend update video just to kind of reiterate what my stance is on the market, some stocks that I'm in, and then maybe we'll go. Actually, I'd like to start off with some basics, as haven't finished my constructing my webinar yet, and I just want to do some education out there, just get us all on the same page. And I apologize for those that already know what the candle is and what it means. And some of us out there aren't used to aren't technical traders or wishing to become technical traders. I just like to go over some basics, and the basics for technical trading is the candlestick pattern and how we read this. Now, I view these candlestick patterns as a chart of the market's emotions. Okay, so like I talked about yesterday or the other day, we mentioned fear and greed, and this is just like reading somebody's mind or reading the stock market's mind, looking at these candlesticks, and you've been trained to note certain patterns, and there are some patterns out there. Most patterns out there are you can see in any book, any trading book, any Japanese candlestick book out there. So there's nothing proprietary about what exactly candlestick is, and there's nothing proprietary, frankly, about most of the patterns that are out there. Uh, there are some of my techniques are proprietary, and once I get that webinar put together, we'll be looking to take on to give those classes to the general public. But it's not, like I said before, it's not ready for prime time. So let's go over the basic candlestick pattern and what we use here. I work off a 10-minute or a daily scale, as well as when I am day trading or scalping. I'll work off the 10-minute chart. In other words, each one of these candles represents 10 minutes, and you'll see if the candle, first thing you'll note with these candles is they're green and red. Now you can set up your candles any way, show any color. So the way I have done, and most people do set it up this way, is if the stock price moved up during that 10 minutes from where it opened, closes higher than where it opened, the candle is green. If it closes lower than where the price opened during that 10-minute window, the candle color will be red. So that's how you tell where the price opened or closed, whether it's the top of the candle or the bottom of the candle, what color the candle is. So I'll keep expanding out here so we can kind of isolate a couple candlesticks here. So we'll take the spiders. We'll take it on Friday afternoon there. So this particular stock, the spiders ETF, it opened, as you can see, at 183.87. If you look at the top left there, right underneath where I type in SPY, is like a kind of a ticker, if you will. Starts with SPY. It's a 20-day length. It's 10-minute candlestick patterns. It was on the 10th of January 2014 at 3:50 is when this candle opened. It opened at 183.87 and went as high as 184.08, as low as 183.86, and closed at 184.07. The rest of the others, R and Ys, are I don't know. To be honest with you, I don't know what they are, and I don't use them to trade. And then the other simple moving average is at 20, 183.67. So that's what that means. Simple moving average on close, and I'm on the 20-day. It goes back 20 day. It's a 20 period moving average. In other words, it takes the last 20 candlesticks and average them for the 20, the 50. I even have 100 on here and a 200. So that's what the moving averages are for. And again, they're simple moving averages on close is what we use. So if this particular one, it opened at 183.87. It ticked down a penny at some point in time, but then it just basically closed higher at 184.07. Again, it went higher as 108, ticked down a penny. So pretty strong candle. stick pattern there. And you'll see some. I'll take this one for example. It opened at 183.21, basically sold off as low as 183.01, and by the time the 10-minute period was up, or that 10-minute window was up, it closed at 183.19, or 2 cents lower than what it opened. So as you can see, during this 10-minute period, the ETF sold off, and then there was some buying or some support that came in at this low and pushed it back up before that 10-minute periodicity was over. Same thing here, opened again at 183.19, pushed up a little bit, or pushed down. I don't have to go in between, inside that 10-minute period to figure out exactly what it did first, but in essence, it traded down a little bit, and by the time the 10-minute window was up, it was above what it opened at. So that's how you read the candles. Basically, for a green candle, the opens at the bottom, it closes at the top. It's green, it went up, it closed higher than what it opened. If it closes lower than what it opened, the candle is red, and then the wick is the range in which the stock, the equity price traded. All right, so that's how we work the candles there. Pretty simple. Find that in any book. No secrets there. Nothing proprietary. Every technical trader that I know trades off of candlesticks. Now you can have the other forms as well. They work just as fine. It's just how you, A, how you're used to seeing the information, B, what makes sense to you. So if some other type of candlesticks make more sense to you, then by all means go ahead. So I'm looking at here. You can get different types of candlestick, if you will, bars. Okay, same type of format here. Opened here, range and close. Same thing. You read these things left to right. Open here, range and close. So that's called the they call that the standard, I guess. I don't know, or the bar. Sorry. Here's some Japanese stuff. Again, you can do the lines. Just take off the highs, or we're at closing price. And other things. Hey, what do I use? Keep it simple. I'm going to do the candlestick patterns. I don't know what monkey bars is. Yeah, who knows what that stuff is. Let's go with this one. Standard. Alright? Any questions on that? Feel free to email me in. Alright, so that's basic candlestick. And again, the patterns that these candlesticks make shows the emotions that the traders, is basically a chart of the emotions. If you string a couple of these candlesticks together, they form a pattern, and there are bullish and bearish patterns, and now again another dimension which to add to your trade, to make it a multi-dimensional trade, to stack the odds in your favor, if you will. So like I said the other day, spiders are, we have a bearish in spirit of bear flag with a time factor or time dimension there. It's coming into a time dimension. So like I said, I'll be looking to short this spiders here Monday afternoon, assuming it doesn't spike up above or sell off before I can short it again. Monday afternoon is what I'm looking on time frame to short via the SDS. All right, let's look at a couple stocks that I have that we've talked about before, that I'm in, just to kind of reiterate my positions. Again, CarMax I bought here last week at 45.22, I believe it was, and I said it was forming that in spirit of bear flag there, and I wanted to see a pop, and we got that on Friday. Now I still want to get follow through, and I want to close above this red bar high here. So if I can get a close above 46.45, I'll be very confident that we're on the uptick there. A couple of reasons why I took this trade. My master level here at 45.20. There's a trend line that goes back to June 25th of 2012, and there's also a gap fill level at about the 45 level that I traded off of as well, and decided to take that trade. So this gap fill right here hasn't been filled yet, and that's what I was trading off of right there. So it didn't quite get filled as either, but if it gets close, we call that in spirit of, and for all intents and purposes, that we'll take that as good enough. So I'll be monitoring this trade this week. Hopefully, get some follow through in this trade. And again, I'd like to see that thing. My ultimate target is going to be about 48.12, or I believe it's 48.12. Get my window to pop up here. 48.18 is what my target is on that. And that, again, that's another master level calculator using proprietary methods. A couple of small caps I'm in that, again, I just started doing these videos last week, so when I was obviously already in some trades. CVM we've talked about, I know, before. I bought this at 58 cents. It popped up as high as about 76 cents, and now it's kind of forming a, again, in spirit of bull flag. Now, why do I keep saying in spirit of and not just saying bull flags? Well, the perfect bull flag is price moves up, and then you have a couple days. Basically, it's at a right angle. So you can see how that's all at a right angle. That is a bull flag. Okay. In spirit of, if it moves up, and then you get days of action that basically look like that. So it's less than 90 degrees an angle between where it moves up and then this. Optimally, you don't want to see this angle. Well, we'll hold that. There is a certain angle where it's too steep of an angle coming down. There's too much sell side pressure, and it's no longer a bull flag, but certainly some selling coming in as well. Same thing holds true with a in spirit of bear flag. So you get moved down, sideways action, basically at a 90-degree angle, and then eventually this thing's going to break down further. In spirit of is basically move down, and the price action moves, ticks slowly up. Again, there is an angle that is too much or too grave an angle that will portend buying action, vice a bear flag. So again, some proprietary stuff that I'll be having in my webinar that I'll be more than happy to teach you once I get that presentation all put together. So here we have for CVM, we have that move up, and now we got some sell side action coming in. Now this bar right here, not a big fan of that bar, and it kind of makes me sketchy about this trade. So I'll keep monitoring it, and if it looks like it's going to be like almost like a micro bearish flag inside this bull flag, I might look to sell, take my profits at 71 cents, and just move on from that trade. The January effect is in full swing. These small caps are catching bids. So while they're hot, we'll ride them. But after January, you got to be pretty confident on your trade to take a small cap. And then basically, I'd be almost hesitant to even take a small cap after January. Again, if the price if you get a multi-dimensional trade and you have some news on the small cap, then maybe. But I'd be very hesitant outside of January to take. Clean Tech Solutions. I've been in and out of this stock a couple times over the last year. I am now in it based on this pattern right here. Again, we have the move up and then the slowish consolidation here. I'll draw it in here real quick for you. We have this move up, and now we got this consolidation down. Again, proprietary time factor coming in soon. You get the moving averages just below, so that's acting as support. So we're looking for that to move up. My target is about 677, and maybe even as high as this high right here, 737. So 677 in my eyes is my first target, and then we'll set the break-even stop and let that thing run. Moving on to DARA, we've talked about this a couple times. Again, same thing. Look at this move up, sideways consolidation, right into the moving average, and and it popped. This one also came in just like CVM, and now it looks like it's setting up for some in-spirit bullish consolidation right above this moving average, probably to make another move down. So we got to be very careful watching that, and I'll probably be looking to move out of some of these small caps this week, just based on the patterns that they're putting in. I don't want to get caught holding the bag when these things come out of favor. One of my Fox 3 alerts that triggered this week is DXM, Dex Media, again another small cap, same principle. Upwards move, slight to downside, consolidation, into the moving averages, into a trend line, looking for this thing to pop this week. Okay, bounce off that trend line. If that thing doesn't bounce off that trend line, then we'll be looking to move out. It did bounce on Friday, about 14 cents. Again, I'm in at 5.98 on this, and I got in on Thursday of last week. Ivan's a small cap I've been in for a long time. I just took profits on it at 70 cents. I took profits on 90% of it. I still kept 10% of it, and the reason why is simply because my broker did not sell all my shares, so I still have 10% of my position right now. So I'm just going to hold on to it and maybe look to rebuy more earlier or later if it can get back down here 35 cents possibly. But for all intents and purposes, I'm out of Ivan since last week. I sold it at 70 cents, 69 cents a share there. Any more small caps? I did get in another Fox 3 alert. I did get into, I believe it was on Friday, was dry ships. Again, a master level at 373. I took it just below that at 368. Okay, and it just put in a pseudo bottoming tail there, almost a bottoming tail, not quite within the criteria, nor is it at the right place in the chart. But I do like the action as well as the volume, where it sold off and got some support around this level, and was supported as well as even increased from where it opened up. So I like the action. We'll see what it can do the rest of the week. Again, it's a small cap. It's a dry shipper or dry ships. I'm eyeing up JCPenney's this week. Had some news on Wednesday, I believe. We got a sharp down action, and now if you look at it, it looks like it's consolidating sideways to possibly go lower. So I'm looking at this 624 level. If it can get there as a possible hit that bottoming double bottom, I'm looking to buy at 624. So again, I'm not going to put that on the Fox 3 alerts just yet, but as it gets closer, I'll be sure to put that out there. And lastly is Wynn Resorts. This stock is massively overbought. Again, but keep in mind, stocks can be overbought for long periods of time. I use proprietary technique to try to get this this shorting level. I shorted it just to pierce to the 206 level. And it's gone a little bit higher than that, so we'll look to see how that goes this week. But this is one of the most overbought stocks out there. Again, it's at all-time high, so it's really tough to short stocks at all-time highs unless you have some proprietary techniques that will allow you to give you a high percentage trade. Again, they're not 100% trades by any means, but it's just to put the odds in your favor and to make lots of money if you can nail these tops. All right. That is it for this week. Again, I just wanted to highlight what my positions were, and I wanted to give you a little bit of a background just to kind of bring everybody up. Now, I'm still looking. If you have any questions on the basics, by all means, email me or put them on the board there at Topgun Trading, StockTrading.com. All right, folks. I'll see you on the charts this week. Take care.